So, hi there. Today I took one by entry, which was really good, and I did not some, it's a big silly mistake. I closed my profits very early due to fear of losing money, nothing much. So, I'm gonna go over the trade in GBUSD. So, this is the price clears out the weekly high. Sorry. So, so price clears out the weekly high, and in daily time frame, I just marked out the previous day high and low. This forward growth. So I just marked out the previous day low and previous day high. This is a weekly high, and weekly high has been swept, and it's ended up big bullish candle. So when I was in the morning, price somewhere around this point, H4. This is the weekly low. It's keep on engineering the liquidity. When it gets swept, I enter my buy position and targeting this liquidity H4 bullish bearish parallel gap. So So weekly high has been taken. Sweep, big displacement to the downside. It was last day, right? So weekly high, sweep one more time, big displacement, come all the way down towards this range. Keep on engineering the liquidity in H1. And you can see one more thing. This fair value that flipped to the upside, it's keep on acting as inverse. And this is a big displacement candle, kind of news candle, I guess. So it's keep on coming lower towards this point. Once it's sweep, by targeting this liquidity. I know this is a panic sellers. I can target this guy, but sometimes the foul gap might act as inverse, and because since it is a structure shift with displacement, sometimes the foul gap will holding the price to pushing lower. So I don't want to risk. This is M15. It's a clear. This is M15 bullish fair value gap. I marked out the last two fair value gaps, and it's a clear engineer liquidity. Sweep, structure shift with big displacement. The family have not even get tapped, go all the way up towards my target. So according to 50 minutes, this is where I expected the price to reach. This is going to be the first. This is going to be the second. So since it gets swept, once it gives the structure shift, I am targeting this buy side, sell side liquidity, fair value gap aligned with this liquidity. Unfortunately, I closed my position somewhere around here. I entered my positions here, put the stop at the low. It's 20 pips stop. It's a big stop. I usually not put that much stop, but the model is good. So I entered my stop at the 5 minutes inversion, and I closed my positions here. I knew I should have closed my I should have held my trade at least to this point, and it's for sure going to reach this point. I knew that, but I'm not holding the trade due to fear of losing money. To be honest, it's a after sweep, it's a clear upside move. No, Faraday might even get tapped, and and this place, it's a clear displacement with the Faraday gap, and it's a beautiful bullish day, bro. Not a bullish day, it's a beautiful buying place actually. So here is what I look. So once the liquidity has been, I just waited since from the 740. I don't like to take any position inside these fair value gaps. I like to see this fair value first sweep. Once it's swept, once it flip this fair value gap, I execute my position right here. I'm targeting this side. This is going to be the first target, and this is going to be my second target. This was my plan in the morning, but unfortunately, I closed my positions around here due to fear. Due to fear, I don't need to fear at all, but I don't have any words to say. I don't have any explanation to give. To it's a clear entry. I should hold the entry no matter what. Last manipulation candle before the structure shift is gonna be clear target below. I should have target this fair value gap, at least this point, at least this high. I close my position around this area. So in 1 minute, in 5 minutes, this was my entry, confident entry. Liquidity has been swept inside the not only liquidity, but also it's 15 fair value gap, and also this was the previous day low. So clean flip, clean double confirmation entry. But in M1, once the liquidity has been swept, there's the last fair value gap that got flipped, right? So this is where I got tempted, but I just waited for the 5 minutes fair value gap to flip. It in one perspective it's good. I get the good conviction and confidence out of it, but the point is the risk is skewed. It's kind of scaled my risk to 20 pips, so I'm only able to put very minimum lot, very minimum position, and I can't able to make much profits out of it. Besides my live account. Mm, actually, think about it for a moment. Clean sweep. Price enter the M15. Price entered the and price also sweep the previous day low. This is the last fair value gap that printed, and it's pretty much what it's pretty much respecting here. Now it's got flip, and that flip to fair value gap keep on holding. No price close below this range. It's keep on rejecting and keep on holding, and and this is going to be the not even a structure shift. This is going to be the big displacement, and this is going to be the big displacement after it's holding. And that fair value gap, engineering the liquidity, swept one more time, keep on going higher. Beautiful buy. So what I'm trying to explain here is this is where I should enter my first position once it got flipped. This is in this rejection I should execute my first position. So this is my first position. This should be my first position, and this should be my pyramiding position. Once I get structures, once I get fair value gap, sellers fair value gap flipped in M5, I can add some positions here, put the stop loss at this low. But unfortunately, I knew that this is the last fair value gap. It's flipped. I can start executing positions, but I bit hesitate. Like, what if the M5 are holding the price? Sweep this one more time. Problem is it's already it's already engineered clean liquidity, bro. Now it's a clean sweep, clean flip, and that fair app also keep on holding. So you don't need to worry about anything. If you should enter your position right here or here, it's going to be valid. Otherwise, after this displacement, you should enter your position inside this fair value gap. This is the structure shift, and that structure shift fair value gap also getting filled and keep on going higher, bro. So it's a fine day, fine entry, but due to my late execution, my risk is my stop loss is going to be around 20 pips, so I'm not able to put much lot. That's it for Gbpusd. Fine day, fine week. So far, so good. And so now I explain the chart of. So this is Nasdaq. So this is Nasdaq. Give me a sec, I'll explain it. What about daily? In daily, the extremely premium sellers fair value holding the price, and it's getting respected like rejected, and it start to sell off to the downside. This is gonna be daily, and in 4 hour, 4 hour after respecting that fair value, it's huge dump to the downside. Big fair value gap in uh, big fair value gap in H4 and it's clearly liquid engineered the equal lows. So I targeted this for the day. I was bearish completely. And in H1, there is a last swing. It's take place out all the buy side liquidity. Tap the extremely premium sellers fair value gap. Give the structure shift with big displacement. This I explained it in the last video. This was a M15 fair value gap holding the price, pushing lower. Big displacement with the structure shift. So I like to see some sort of selling inside this range. So I was bearish today. In at least inside this range, I need to be bearish. So, but it was due to news. So it was not a solid thing, but still I was bearish in the morning. So what kind of things I have? This is the for this whole swing. This is going to be the equilibrium level. This is the previous day low and previous day high. This is the equilibrium level. M5, M15 sellers fair value plus 50% of the this is a 50% of the H4 range and plus equilibrium level of the whole swing. It was so I consider it as a important level. Go all the way up, stop, sell off. Once it sweep the low, go all the way up to this fair value gap, again start to sell off. In M5, what happened? So this was in M15. This was a clean fair value gap, right? When I was in the market, I marketed market out this fair value gap. I expected the price. I expected this fair value gap to hold the price pushing higher towards these imbalances. So that was my plan in the morning. So I execute my own buy entry, but due to my silly small mistake, I lost it. It's not coming up. Come on, boy.